Thank you, Madam Chair, and thank you, Chairman Powell. I appreciate you sticking around all the way to the bottom of the dais here. If I get elected 8 more times, fingers crossed, I'll have as much experience in this line of work as I do in the energy sector. So I still come here primarily as an energy nerd, and I have a real concern that we are not dealing with the realities of climate change scientifically. We understand viscerally what it means to have rising sea levels, but we haven't really thought about what it means to have an accelerating rate of change. Compound interest confuses people, and compound changes in the environment, we don't even really think about it as well as we should. Just a couple data points that I hope all of us can appreciate. The first evidence that hominids made fire is a cave 1 million years old. James Watt invented the steam engine 244 years ago and ushered in the Industrial Revolution, and 50% of all the CO2 we have ever emitted as a species is since Back to the Future came out in 1985. This is this massively accelerating shift, and if we went to 0 CO2 tomorrow, we're looking at 2 feet of sea level rise coming. The more realistic trends we're on is at least 6 feet of sea level rise coming, and at that level, there's estimated about $23 trillion of economic loss to the system, $900 billion of U.S. property at risk before factoring in debt losses and pulling out of insurance. And there are some serious systemic risks to the economy if we leave those unaddressed. And I just want to understand a little bit how you and the Fed are thinking about those risks. Number one, given that the assets exposed to climate change exceed the entire subprime mortgage market prior to the global financial crisis, how, if at all, is the Fed thinking about climate change as a systemic risk to the economy?
So climate change, again, a very important issue, one that is really the province of elected representatives to set the overall direction of society in how we will respond to climate change and its challenges. Nonetheless, we have a job to do, and that is to think about the potential implications for the financial system, for the economy. And I think we're at the very early stages of filling in what exactly that means. In terms of things like particular assets, these are longer term considerations. We're essentially mainly concerned with business cycle issues. That's what we're focused on, is issues for the medium term. Climate change is a much longer cycle kind of a thing.
If I may, a part of the concern I have is that the actors in the space do not have planning horizons that match to the reality that you and we do, right? There's people signing 30-year mortgages right now for properties in Miami Beach, and they may plan on reselling that mortgage a number of times, but somebody's going to be left holding the paper with that sea level rise coming. The insurance industry typically has 1-year holding period. So, and even if the U.S. is successful at reducing carbon emissions, there still is a massive reallocation of capital. Have you looked at the transitional risks in thinking about how that starts moving around and dislocating the economy?
So those are the things that we're at the beginning stages of looking into. As you obviously know, there's a lot going on in the financial markets. There's a lot of disclosure happening, and expectations around disclosure are changing significantly for publicly held companies, and that will have an effect. But that's not really what we do. We do monetary policy, bank supervision. Well, our banks, to your point, our banks have to be taking into account the risk of severe weather events and potentially, I suppose, of rising.
Well, let me maybe give a specific one that's been bugging me lately. If you look at the fossil fuel industry, the oil and gas companies, the coal companies, the debt that they hold relative to their assets, given as their assets are so heavily dominated by fossil fuel reserves, if they were to extract all their fossil fuel reserves, things are going to be way worse than the $23 trillion I just told you. Have you ever considered stress testing to see whether their failure to fully monetize their reserves might effectively make them fiscally insolvent? Because if that to me sounds like a materially adverse event, but I wouldn't want to bet that the economy is going to commit suicide. But if I look at the financial statements of a lot of those companies, it's not clear to me that they can monetize those assets. That has a meaningful effect on the risk of money that's held today. I think there was $700 billion lended to fossil fuel companies in the last couple of years. Have you considered that as a systemic risk?
Well, For us, it's systemic risk to the financial system, and we'd be stress testing banks. As you know, the Bank of England is doing some of that now, and we're going to be watching and see what they learn, and maybe that's a path we'll follow.
Thank
We haven't
you.
made that decision.
Thank you. I'll follow up with you offline. I yield back my time.